year 2020 brought our way a pandemic that shook things in the financial market. Because of how stable and uncertain the market has become, choosing the best fintech ETFs to buy in 2021 can be challenging. 2020 has certainly shown clearly how unpredictable the market can be. Thankfully, we can still identify some fintech ETFs that are worth investing in as they promise profitable rewards. In today's video, we would be taking a look at fintech ETFs for 2021 to help you take advantage of the best fintech ETFs to buy. Before we get into the video, take a quick moment to subscribe to our channel and to turn your post notifications on by hitting the bell icon. With that done, and without another moment of hesitation, let's get into this video. Shorthand for financial technology, fintech involves technology companies that create novel technology to enhance or disrupt traditional financial products and services. They often are involved in mobile payments and banking, insurance, mortgages, e-commerce, budgeting, credit, and so on. As a result of the pandemic, the use of fintech peaked. Even before the pandemic, many customers have expressed their dissatisfaction with traditional banking methods and surveys. During the pandemic on year 2020, considering that close interactions were restricted, more people leaned towards contactless payment systems that service a demand not satisfied by the traditional banking sector. This trend of surging fintech popularity is expected to continue since smartphones and internet access are widely available and accessible. The shift to innovative, online-only, tech-driven banking solutions opens a window of earning opportunity to investors. As this financial technology sector experiences fast growth, fintech ETFs give a narrow exposure to it by capturing stocks and gains in companies involved in this segment of the banking system. There are several small, volatile startups with the financial technology sector that can be difficult to identify individually. Thus, ETFs also serve the function of enabling diversification within the narrow market segment. Given their ambitious goals, one would find that many fintech ETFs typically favor growth stocks with lofty valuations. Here are 5 fintech ETFs to watch. Number 1. GLOBAL X FINTECH ETF. The GLOBAL X FINTECH ETF, or FINEX, seeks to invest in companies on the leading edge of the emerging financial technology sector. It enables investors to access high growth potential through companies that are applying technological innovations to disrupt and improve the delivery of financial services. FINEX from GLOBAL X is the oldest fund in the fintech space and has over $1 billion in assets. It offers investors high growth potential, an unconstrained approach, and ETF efficiency. FINEX captures companies in developed markets globally. Many of these companies get most of their revenue from fintech, involving insurance, wealth management, payment solutions, lending, crowdfunding, blockchain, and more. FINEX has 40 holdings which are very closely tied to the financial sector and an expense ratio of 0.68%. Adyen, Square, Intuit, PayPal, and Fiserv are FINEX's top holdings. The fund is market cap weighted and as such skews heavily to the US at 65%, followed by Australia at 15%. The performance over 1 year is at 37% and assets under management reach up to $1.3 billion. Number 2. ARK FINTECH Innovation ETF. Led by Cathie Wood, ARKF is a fintech ETF from the popular ARK Invest. It provides exposure to fintech innovations including mobile payments, digital wallets, peer-to-peer lending, blockchain technology, and risk transformation. ARK FINTECH Innovation ETF launched in early 2019 and has since amassed over $4 billion in assets. ARK states that the fund aims to capture the introduction of a technologically enabled new product or service that potentially changes the way the financial sector works. ARK as a whole are focused on disruptive companies. ARK FINTECH Innovation's top 10 holdings over 10% in Square, and then holdings like PayPal, Zillow, Pinterest, and Shopify, all comprising more than 3% each. There is also Coinbase, which is the leading cryptocurrency exchange with more than 68 million users. Coinbase's trading volume increased 16 times from the same quarter a year ago to $462 billion between April and June. The company uses a business line that makes Coinbase one of the best crypto stocks on the market. The ETF is largely focused on the increased adoption of digital wallets, the growth of which is primarily driven by 2 companies and their respective apps, Square, Cash App, and PayPal's Venmo. ARK expects more than 220 million digital wallet users in the U.S. by 2024, equating to an equity market opportunity of $800 billion. ARKF's active management commands a higher fee of 0.75%. The performance over 1 year stands at 44%, The expense ratio is 0.75%, and assets under management hits up to $3.7 billion. Basically, we can say that buyers of the ARK FINTECH Innovation ETF are getting fintech exposure from a variety of angles. Number 3. ETFMG Prime Mobile Payments ETF. Recently launched in 2015, the ETFMG Prime Mobile Payments ETF, or iPay, is the first exchange-traded fund to target the mobile payments industry. iPay goes narrower within fintech, primarily targeting mobile payment stocks such as payment infrastructure, processing services, and solutions. This segment of the fintech sector, though narrow, is highly promising. Apparently, this narrow focus comes at a cost, seeing as iPay has a fee of 0.75%. ETFMG created the fund to capitalize on the shift from credit card and cash transactions to digital and electronic systems. The fund benefits from the increasing use of smartphones, e-commerce, and the need for hassle-free transacting. Surprisingly, this fund has over $1 billion in assets. iPay's top 10 holdings include the usual suspects like Visa, American Express, MasterCard, Square, and Discover. Visa and MasterCard are primary holdings in iPay. These were fintechs before the term even existed, and they have become so wildly popular that the electronic transactions carried out around the world are done using Visa and MasterCard. The performance over 1 year is currently fixed at 31%, expense ratio is at 0.8%, assets under management is at $1.3 billion. Number 4. ECOFIN Digital Payments Infrastructure Fund. ECOFIN Digital Payments Infrastructure Fund has a performance over 1 year of 30%, an expense ratio of 0.4%, and assets under management currently at $14.1 million. The fund provides access to all fee-based credit card value chain participants, including merchant acquirers, processors, networks, and issuers. The ECOFIN Digital Payments Infrastructure Fund, or TPAY, invests in companies whose primary business is one or more of the following categories: credit card networks, electric transaction processing and associated product services, credit card issuers, electric transaction processing software, or online financial service marketplaces. By revenue, electric transaction processing makes up 52% of the fund, followed by credit card networks at 17% and merchant payment product services at 13%. The top holding in TPAY is DocuSign, a company that enables organizations to manage electronic agreements. DocuSign experienced massive growth during the pandemic as companies were forced to digitize their operations, including their John Hancock. Afterpay is another top holding, but was recently acquired by Square in a $29 billion all-stock deal. The rest of the holdings in TPAY involve a higher allocation to the disruptor class of fintech like Square and PayPal, with a mix of legacy names like Visa, MasterCard, and American Express. Number 5. Vanguard Growth ETF. Vanguard Growth ETF is perfect for growth-oriented investors eager to look for bigger returns in big companies, but it is also worth noting for newbie investors. This ETF provides investors with a straightforward, low-cost index fund with a focus on growth trends. Vanguard categorizes its stock holdings by their size. As of February 2021, Vanguard Growth ETFs approximately has 260 stocks, filtering the biggest companies' organizations on Wall Street with growth metrics. Its top companies include some of the world's popular big tech, such as Facebook, Microsoft, and Apple. 45% of Vanguard's total assets come from the top 10 major holdings. If you're planning to invest in affordable yet larger funds on a simplified platform, Vanguard Growth ETF is one of the best fintech ETFs you can purchase for 2021. So far, we've explored the top 5 ways to get access to the fintech sector. Each of our listed fintech ETFs for 2021 vary in scope, cost, popularity, and selection. With everything transacted online, the fintech industry is undoubtedly flourishing. Although it continues to yield state-of-the-art innovations and has a promising future, there are no fixed and predictable returns. The fintech ETFs you choose to buy would be ultimately determined by your investing goals and risk tolerance. Which of the 5 fintech ETFs would you like to invest in? Which is your least favorite? Share your thoughts with us in the comments section below. Don't hesitate to like this video if you found it helpful, and feel free to subscribe to our channel. To make sure you never miss one of our videos when they are uploaded, also turn your post notifications on. We have other amazing similar videos for you on our channel, so go ahead and check them out. We're certain you would find them useful. On that note, we're closing the curtain on this video. Thank you for watching, and we hope to see you in the next one. Bye for now.